I am delighted to be your moderator for the next hour and 15 minutes. We're going to start right off with our esteemed panelists. Let's start with Raimundo Castilla from Prosegur. Do you want to introduce yourself and just explain a little bit about what you're doing within the crypto space?
Thank you very much, Sandra, for inviting me to this fantastic event. It's a real pleasure for me to be here and sharing this panel with these great colleagues. My name is Raimundo Castilla. I'm CEO of Prosegur Crypto, the brand new digital assets custody service of the Prosegur Group. Prosegur, for those that do not know it, is a global leader in the security industry and one of the most trusted partners of leading financial institutions for cash management and custody services. We have a presence in 26 countries, 5 continents. We hold around 400 billion under management, billion euros under management. We are ranked number 2 globally and number 1 in LATAM, have more than 500 vaults worldwide, and we serve more than 200 banks around the world. For the last year, we have been working on this new service, and we think we have built a unique proposal of digital asset custody for the institutional market in terms of security and trust. So very happy to share it with you today.
Great. Well, we're going to talk a lot more about that in a minute, but I'm going to move over to Barrett. Would you like to introduce yourself and your organization?
Yeah, absolutely. Thank you, Sandra. So my name is Berit Voes. I am the director of the fintech subsidiary of Riddle & Code, the blockchain interface company. Riddle & Code is actually active in a variety of industries such as energy, mobility, materials. But of course, one of our main activities is in the financial industry, where we provide hardware and software stacks to empower our customers, which are crypto exchanges, crypto funds, but also more traditional financial institutions. And we help them to manage all aspects of basically the digital asset lifecycle, from key generation, custody, regulatory compliance, token management, and even tokenization. And we do that with a product that tries to combine the highest levels of security with the required flexibility for the product. I myself have a background in the financial industry as well. I used to work in banking for quite a few years, which is also where I started working on this topic already back in 2014. And I've been applying that experience within Riddle & Code for the past 2 years now.
Fantastic. Over to you, Henrik.
Yes, thank you very much, Sandra. Henrik, I'm one of the founders and co-CEO of Finoa. We are a crypto custodian based out of Berlin, Germany, and yeah, probably by now for the institutional market, the largest player across Europe. Our target groups are any institutional player in the space, be it family offices, crypto funds, corporations that move into crypto with their treasury. So serving alikes like Deutsche Telekom and their subsidiary T-Systems or Rocket Internet, and large venture capital firms like Early Bird here in Germany. We provide 2 products. We provide custody as well as staking services. So for new and upcoming protocols that run on proof of stake, we provide the access to staking as an additional, let's say, financial product for institutional investors that move into that space, and broadening our product portfolio to further DeFi use cases, to basically build the gateway for institutional investors to any digital asset financial use case that you find in the ecosystem. Very happy to be on this panel today. Thank you very much for the invitation.
Great, appreciate that. And we will definitely be touching upon DeFi and some related topics around staking as well. So appreciate that. Over to you, Lior.
Hi, everyone. I'm very honored to be here. My name is Lior Lamesh. I'm co-founder and CEO of GK8. GK8 is a cybersecurity company that providing banks and financial institutions such as custodians, hedge funds, with a self-managed solution to offer the same services that they're offering today, but for blockchain-based assets, obviously including custody, staking, tokenization, and more. I'm personally earned my stripes in one of the toughest neighborhoods in the world for cybersecurity, in the Israeli Prime Minister's office. I was part of an elite team that protected the strategic assets of the country from cybersecurity attacks. We are very much experienced, as well as the rest of the co-founders, with how to protect from state-level hackers that's willing to invest a large amount of money in order to cause damage of way more than that. And this is the same approach that we are bringing into the company. We started our journey in the crypto space as almost 3 years ago, we hacked one of the most secure solutions in the market that claimed to be cold, and we proved it wrong. And then what we realized is that any solution needs to be connected at some point to the internet in order to initiate transaction. And we tried to do it differently, and we ended up doing exactly that. We have today a solution that can make a full process of creating, signing, and sending blockchain transactions without the need for being connected to the internet at all. We have today clients that's managing over $1.5 billion in digital assets, including eToro. And one of our core partners is over here, actually, Prosegur, with Raimundo that just presented himself. So I'm very honored to be here today, and thank you.
Fantastic. And certainly not least, Francisco, would you like to round us out here?
Thank you, Sandra. Hello, everyone. Also very honored to be here in this panel with all of you. I am Francisco Maroto. I work in BBVA, a bank with presence mainly in Europe and Central and South Americas, but also global presence. And I am part of the Client Solution Strategy team, which is the team in charge of transforming the bank and moving it towards the digital world. And within this space, I am leading the blockchain discipline. We have been quite active in this space since 4 or 5 years ago. At the beginning, more focused on private blockchains, but now looking more into public blockchains and crypto. And we are now in a friends and family phase with our first trading and custody solution for our BBVA Switzerland customers. And looking forward to the conversation with all of you.
Fantastic. And I'm so glad to have all of you here. And just for the audience's benefit, we have quite a diverse group, not in terms of just the size of the institutions and the various backgrounds, but also we've got companies hailing from Spain, the Netherlands, Germany, and Israel. So that's fantastic. I'm going to take us back to the 2015-16 years when I was at a large market infrastructure looking at crypto custody, and we actually bought a crypto custody business. And frankly, we were just trying to figure out how we reverse engineer to figure out how we can not only store Bitcoin as they were originally coded to do, but also how would we store other digital assets. And I will tell you, back then, it was very rudimentary, and frankly, there were a lot of missing parts. And so for the first subtopic of today, I'd like to pose the question around, where are we? What is the state of institutional grade crypto custody? How far along have we come since, kind of mid 2010s? And where do we need, what are the gaps and what are some of the challenges that we face today? And as you as providers and builders, what are some of the things that you're thinking about? So I want to kick off with just thinking, Barrett, could you talk to us as sort of the front line of working with clients? What are some of the things that you're seeing at the current state of institutional crypto custody, especially as we now go into the trillions of value in market cap?
Yeah, absolutely. And I really think and hope that in the past 5 years, we've come a long way. And with we, I mean us as an industry, of course. We've seen interest from institutional players pick up in the past months, in the past year, at an increasing pace. And I think the growth will still continue quite a bit. We're not there yet at the peak, I think. And maybe just to start off, and I think also looking around at my co-panelists here, there's actually two different routes to go when you're an institutional player and you're looking for something around crypto custody. And I think the first route is more up our alley, which is a solution that allows you to be your own custodian and set up your own custodial services for your customers, maybe, or your network. And on the other hand, you have full service custodians like Finoa, who have the entire service around it. And I think a lot of that comes down to the main question of, are you controlling your own private keys? Do you want to have that control, as well as do you want to have that responsibility, right? With control comes responsibility. And do you have the capabilities to do so? And I think one of the main areas where the industry has really improved is in taking away the complexity for the companies that just want to focus on the assets and making money there and don't want to be bothered with or don't have the capacity to be bothered with the large amount of complexity that comes with custody, the security aspects, the different protocols, but also the processes around it. So I think there's a lot more sophistication right now in the solutions that are out there, combining, let's say, the strong security that cold wallets have, hardware-based solutions, but combining that with the flexibility and the logic that comes with software. Because as a big institution, you need both. You need to have that security, but also a means to keep operating your business the way that you are used to make sure that your processes can be followed, to make sure that you have operational efficiency, scalability, that you can implement compliance processes. And I think this is really where solutions have become more and more sophisticated over time, as well as integrations to third-party services, whether that is for anti-money laundering, financial services, DeFi services, as Hendrik was mentioning, which are also things that we do at Riddle and Code, because ultimately custody is, I think, a very important and core part when you want to offer services in and around crypto. But ultimately, it's an ecosystem. And I think one of the main challenges is how do you keep connecting your wallets and your custody and your other technical services to that incredibly fast-growing ecosystem of very new and very exciting things that are happening with crypto, with DeFi, with staking, etc. So there is actually a lot to keep up with, and it makes it challenging, but also a very interesting time to be a part of this industry.
Absolutely. Thanks for painting that landscape, Berit. And Henrik, do you want to add anything to what you're seeing from a client standpoint, or just in terms of the services that you're expanding out to?
Yeah, no, I very much agree with Berit and her analysis on, first of all, how the market is kind of set up. We, as we know, when we started in 2018, well, the project started in 2017, but then we incorporated in 2018. We also looked at the market and kind of wanted to understand, okay, what's already there? Like, who could we partner with? Do we build our own solution and then services on top? And we decided to do the latter. We said, okay, we want to build everything end to end ourselves, but we also want to provide the service directly to the customers and not just, let's say, enable other players with our technology to provide their services on top. And we did that as well because we figured that in 2018, the overall market for example, financial institutions that were looking into the space was just not really developed just yet. So we wouldn't really find a lot of interest in a pure technological solution. But what we saw at the same time is that a lot of players who in 2017, 18 started to get into the markets, which was, let's say, very innovative crypto investors, crypto venture capital funds, etc. They were looking for custody solutions, but they were looking for the direct service to help them with, because and that goes back a little bit to the point that Berit mentioned on private. Do you want to own your private key? Yes or no? As a private individual, I very much understand that you want to do that. But if you are a fund manager, for example, and you have third-party money in your fund, and your LPs also questioning a little bit, how do you do custody? I don't think that the answer is always the best to say, well, I have the private key and I have it here, I don't know, on a hardware stick or so in the vault, but I actually work with a professionalized player that really focus on doing that on an institutional base. And that kind of led us to the decision to build this out as Finoa. And what we've seen over the last 6 to 10 months is tremendous in terms of institutional demand in the space. Obviously, the news that come very much from across the pond from the US with Tesla, PayPal, moving into the market, be it for treasury or be it for actually building out services, that has incredibly helped also the conversation here in the European market, because now everyone understands, which 2-3 years ago wasn't so clear, that this market is an asset class that's not going to go away. And the financial services, the DeFi space, it's gonna develop. Will it look the same today as in 3 years? Probably not. But pieces of it and parts of it, they will stay. And now every institutional investor is kind of exploring, and that obviously helps tremendously in growing also as a new player in the space. And I think some of my co-speakers here from more, let's say, traditional players who now also come into the market are just a perfect proof of this development that we've seen over the last year or so.
Francisco, I think that's directed to you. I would like to get your perspective on Why would BBVA be even interested in crypto custody? I think I know the answer to that, but please.
I mean, I was going to add on top of what Berit and Henry were talking about, that I totally agree. So 3-4 years ago at the beginning, and I think there was a real difference between the crypto ecosystem and the traditional institutions. And when I went to speak with a crypto company, not only about custody, but about any other themes, we saw that the crypto company knew a lot about crypto. They were experts in the technology, but they don't have that much expertise or experience in working or collaborating with institutions. And on our side, institutions, we knew a lot about institutions, but we had no idea about crypto. So there was a big difference between the crypto world and the institutional world. And what we have seen these years is that there has been a convergence. So the crypto ecosystem has started building custody for institutions, like the panelists or the companies represented here in the panel. And we have seen how the traditional institutions have been catching up in crypto and learning how to operate and what can be the potential or the importance of this technology. And answering to your question, what we see is that this type of technology or these new markets could be very disruptive for the financial industry, and that can be of interest for our customers. So we want to build the capabilities in the bank so that we are able to offer access to our customers to these new markets and provide a secure and a very simple access and moving them away from all the complexities around crypto. No? This is what we want to provide with our new service.
And to the audience that's asking questions, we will cover regulations, so just hold off. I'm not going to cover that right here. I do want to go to a point that Francisco made, which is around the gap closing between crypto fintech firms and the big incumbents, traditional players, and the collaboration that also occurs. So Raimundo and Lior, can you talk a bit about how you guys have collaborated and what that looks like? And particularly, Raimundo, from your standpoint, how does that help you as a large organization? You're doing crypto, obviously, but you do represent a significant player in the security business. So could you guys both talk a little bit about that in terms of the collaboration and also what you think about the current state of the custody business?
Definitely. Should I start? I'll start,
Yes.
right?
Go
Right.
on.
Sure. All right. So I think that eventually both Prosegur and GK8 represent something very specific. GK8 is focusing on providing the highest level of protection from cybersecurity, while RAI and Prosegur Crypto are focusing on combining our cybersecurity protection along with their super expertise with physical protection. And I think that this was the basic of creating this super extremely secure service for the clients. I think that eventually banks and custodians have two options, as the rest of the panelists just mentioned. One of them would be having a self-managed solution, and the other one is using a third party. By having a self-managed solution, eventually you can have larger opportunities and different services that could be offered. You can control your destiny, you can control your private key. And I think that it's something that's very important in order to create unique opportunities, in order to create unique services that no one else can offer. Yeah, I mean, that was the basic of why we started. I have a lot more to share, but I will let Rai to take it from here.
Great.
Yes, we as, let's say, security and custodian specialist, and I think we can bring newcomers in the crypto world. We bring two big things. I think this is, on one side, this experience, and on the other side is leadership, right? Experience in terms that for more than 40 years, we were understanding and minimizing risk worldwide and adapting solutions to each situations and markets, as we are trying to do also in the crypto world. And in this sense, we have intensively trying to understand where are all the risks in the custody chain, and concluding that there are plenty of risks, but there are two main categories: the cyber and the physical, right? And we want to, we are working this last year to build what we think a unique solution that combines both things, physical and cyber security risks, in what we call our crypto bunker, which is a, let's say, ultra secure offline space where not only the systems are stored, but also the people managing the cold custody operations are in a safe space, right? And what we have seen with some players that are starting or that have started offering services is that they are getting aware of the importance of the physical risk and the physical risk of their teams also, and the complexity of doing it properly. So I think we have achieved a very interesting solution.
Great. And the point about security, especially physical and cybersecurity, we are going to delve much deeper into that. But I do have a question from the audience, which I do want to pose to you guys, and then we'll move on. But let me see here. It's actually directed to Henrik and to Raimundo, but I think those all are relevant to answer. Are you planning on offering services for end users, I think retail, consumer, or is the custody plans services remain B2B?
Yeah, maybe I can start and go ahead. So yeah, personally with Finoa, we are targeting what we call professional investors. So yes, we do have high net worth individuals as well that decide they want to have an institutional grade solution because they just say the market for B2C solutions that is maybe not for the volume of assets that they want to store in crypto. It's not the right service, so they do consult us as well and work with our platform. In general, we tend to focus very much on the institutional space, just because that's where we see the majority of growth coming from, also expectedly over the next, let's say, 5 to 10 years in the market. And I personally think, just from my personal experience, I think there's a lot of good providers already in the B2C space that you can very much work with. I mean, we all know, I think tomorrow is the IPO of Coinbase scheduled. And one of the, if you look only at the market cap that is expected to realize one of the largest banks in the world, very much B2C focused. Now they have a B2B offering as well. And those are fantastic players, right? And that's for us, we will just have to define if at one point we want to bring our services into the B2C aspect, but for now we are very much focused on B2B.
Fantastic.
In our case, we are also focused on the institutional companies, but through our platform, we provide also technology as B2B2C operations for our clients. So some of our B2C clients will show that the cold custody part is let's say supported by us. So we also enter in B2B2C models.
Fantastic. Barrett, do you have any final words?
Yeah, exactly. I wanted to actually give a similar answer to Raimundo, and this is also what we see a lot. So of course we provide our solution as a technology platform, is enabling other custodians who might have institutional clients, but of course also retail clients. So I see that there's an equal interest among our customers, whether they are servicing institutional clients or retail clients, to have that core solution, custody solution behind it that offers that security. Of course, let's say the end processes might be slightly different, for a retail customer versus an institutional investor, which makes sense. There might be also slightly different regulation, which we'll talk about later a bit as well. But our solution is being implemented by custodians who serve both different markets. So and it should also be the case. Anyone's cryptos should be as safe as anyone else's, right?
Fantastic.
Amy, actually, as part of our solution, I mean, we just mentioned the cold part of our solution, but we providing fully end-to-end solution that combining also the cold vault part along with multi-party computation technology. So our clients can use it in order to provide services for both institutional and retail clients. I think there are some different requirements eventually between the ones that looking to offer service for institutions compared to the ones that want to offer service for retail clients. When it comes to the institutions, there are very specific requirements that should be in place in order to meet the compliance and control requirements, such as anti-money laundering, KYC, insurance, and so on. I know that we get into that in detail later on. While on the retail side of things, there should be a technology that on the one will be secure enough, but on the other end can be used in order to make a lot of transactions per second. And this is where our solution, as an example, on the multi-party computation side can take place. In our case, it can make 7,500 transactions per second.
Well, Lior, you've done a great job of leading us right into the next subtopic, which is really around security. As this industry grows, the security point, both physical and cyber, is going to be top of mind along with the compliance and regulation questions that we're getting. And by the way, guys, this audience is very focused on regulation and compliance. So you're going to get a lot of questions once we move on to that topic. Lior, unpack for us, and you know, a lot of people here are not security people. Unpack for us, what are the most challenging vulnerabilities that you see for cold and hot wallet solutions? How are hackers potentially, you know, exploiting these vulnerabilities? Can you just explain it to the average person, sort of what some of the issues are?
Definitely. So first of all, it's important to understand that there is a difference between compromising bank or custody that holding traditional assets compared to the ones that holding digital assets. In order to compromise a bank, you need tanks and soldiers or like physical power in order to get into it. But when it comes to blockchain-based assets, it's different. It should be understood that blockchain is immutable protocol. It means that once hackers are taking control on the local environment of the bank, he can make a transaction on his behalf and steal his money, and then there is no way back. And that's why it's super sensitive to avoid such kind of hacking event, because there is no way back. And even on top of that, it's easier for hackers to lose his tracks over blockchain, and that's why hackers are very much incentivized. If we see the past years, in 2018, it was $1 billion that was stolen among financial institutions that offered crypto services, mainly crypto exchanges. In 2019, it was 4.6. And this problem is predicted to be even worse as hackers are becoming more incentivized because the market is aggressively growing. Now, in the cybersecurity aspect, there are two main solutions. One of them is hot wallets, and the second one is cold wallets. Hot wallets means that the private key, which is the phrase to use in order to make a signature on a transaction, is stored in online connected device. If it's stored in online connected device, it's something that's easier to hack. But even the most sophisticated solution, multi-signature or multi-party computations, are not sufficient. They're not sufficient because eventually what hackers need to do in this case is, instead of compromising one internet connected computer, to compromise typically 2 or 3 different internet connected computers. Now, based on our experience, at least, it's safe to assume that $1 million would be enough in average for hacker to invest in order to compromise one internet connected computer. So if all he needs to do is to invest 2 or 3 millions to compromise 2 or 3 different computers, he would definitely do it. The ROI would be positive for this hacker. Now, on the other end, there are cold solutions. And we claim that the existing cold solutions are not really cold, because blockchain is interactive protocol that requires bidirectional connectivity. There is some points where you need to take a mandatory data into the transaction structure before you can make the signature. In order to get this data, you need to use some kind of bidirectional connectivity. So there are some solutions that using micro USB cables. There are some others that HSM based that connected with the LAN cable to internet connected computers, or others that using some kind of thumb drives or QR code and cameras, and so on. Each of them take raw inputs from the public internet directly to different hardware that's supposed to be air-gapped. But the instant when you take something that was connected to the internet to another computer that's supposed to be air-gapped is not air-gapped anymore. And that's why we claim that none of these cold wallets are really cold. Now, this is where our focus is. We are tackling this man-in-the-middle attack, as our innovation is very much in the cryptography layer, that's allowing us to make the whole process of creating, signing, and sending the transaction without the need for receiving any input from the outside. That's how we change the ROI for hackers, because it doesn't matter if, even if we would have vulnerabilities in the solution, no hackers would be able to exploit them because there is no way in. Now, when you take this kind of solution that never connected to the internet to manage the majority of the assets, along with additional layer that managed small amount of assets that's based on multi-party computation, you change the equation for hackers, because hackers will not invest a large amount of money to compromise MPC and then earn small amount of money while the majority is in the cold vault that cannot be hacked. So this is how GK8 is tackling this issue. Yeah.
Great, thank you.
Sure.
Roman, do you want to add anything to what Lior has said?
Yes, GK8 has like a statement that says, you can hack what you can reach. And this is a statement that we follow it also in our solution. We were inspired very much for this statement. And also in the physical part, what we are trying is that our space where not only the system are stored, but also the people are working on manual operations, because let's say cold operations has to be part of them has to be manually. So people working on them, not on online on the blockchain or automized. So our solution is based on that principle that says that no, and unreachable and let's say a reachable space where not only the system is unhackable, but also the space where the systems and the people are working are unreachable. So this is what we call our crypto bunker, and this solution that seems to be is really the safest place, I think, where people would like to have their crypto assets. And this system may sound to be let's say slow and hard to handle, but what we have designed is a dynamic process behind to manage these assets, supported by an easy and safe communication systems for our customers that can be used then as a web platform and asset management for asset management, or as an end user app for asset inquiries. So yes, this is the solution that we together with GK8, which is for us the securest technology that we know, have built together.
Thank you for that. Francisco, if I may ask, banks spend lots of money on security just across the board anyway. But when you were thinking and designing your custody solution, were there any additional thoughts that you had related to, or considerations you had related to security, or did you maintain the same sort of high level of security that all banks normally have anyway?
So in this space, we needed to have an extra effort. So we have the standard that we have for the bank, which is, I understand that quite good, because we are not stolen or hacked normally. But as we were dealing with new assets, new technology, as the rest of the panelists has spoken, it's a very fast-paced technology that is constantly changing. We didn't have the complete expertise at that time of all the teams, so we need to do a special effort in this space, and we decided to partner with a third party, with a custody provider, such as the ones in the panel. In this case, we chose Metaco, which is well known in the industry and also had provided custody to financial institutions, and was based in Switzerland. Was something good for our new solution, as we were building it in Switzerland. No, so we decided to partner instead of building it in-house for the complexity, and also for getting the best practices into in-house.
Right.
And also in this space, we decided to partner with consultancy firms, legal firms, and other providers in the space in Switzerland, which had the expertise, the best practices, in order to bring them also into the solution. And we have also been working in several security audits. So the whole process end to end has been audited several times, all the code, of not only of the custody solution, but also of the transactional part or the operational part of the solution has been audited in security. And new mechanisms have been introduced into the banking app in order to operate with crypto, to have extra security layer. So to answer your question, we have done a special effort to make it a more robust solution to custody the crypto assets.
Thanks for that. I think we could talk a lot more about this topic, but I want to end with Berit and Henrik before we move on to our next topic. Any other views that you have related to the security aspect of, the ever impending threat of cyber hackers, and also, do you have any views on whether the current cybersecurity models need to be thought? A lot of people are saying it's broken. We've got honeypots of data all over the place, and as data becomes value, why do we still have these models? So, any views that you may have from your perspective is welcome. Please go ahead, Barry.
Yeah, absolutely, and I think I really agree, of course, with what the first two gentlemen were saying about the importance of physical security. Supported by hardware. At the same time, I think there's several levels at which you can have, let's say, security concepts, because there's also always funds that need to be readily available, and whether that is for automatic trading or for whatever you can come up with, where you need really those assets to be available at an instant, and this is why we try to make also that combination between cold security or cold wallet-like security, which is heavily hardware based, and I think we try to do that in two different ways. First, centrally, right, with our platform, with our wallets, and we support that then with, let's say, decentralized hardware as well, which are literally hardware devices that are necessary, for signing transactions. And here you can literally split in the type of device, but also geographically and even socially, completely different people, a piece of your security, because not all of the threats, of course, are cyber-based threats. There's also things like social engineering, plain human error, etc. So, I think part of security is also being able to have processes in place to prevent these type of attacks from happening. So, coming back to multi-party computation, being able to set up a variety of multi-signature schemes based on, thresholds, location, maybe even 24-hour volumes, or anything that you can think of. I think this type of flexibility and support from a product can protect against a lot of other security issues as well. And I think to the other extent, what we've seen in the past, and I think we still see it quite a bit today, of course, is that the more assets you put in a single wallet, the more attractive that wallet obviously is for attack. So I think also more decentralized architectures, of the wallets themselves, are a piece of the puzzle in protecting assets from hackers. Obviously, that means that you have to have a solution that is able to manage a large quantity of wallets, but still in an easy and let's say error-proof way.
I also agree with Berit, by the way. May I jump in quickly? The way that we are tackling this issue is managing the majority of the assets in the cold vault that is not connected to the internet differently, in a way that is never receiving the input, while the second part is based on multi-party computation, which is the keyless technology, means that the private key is not by himself in any single place together. And the way that we are making the risk-based approach is that small percent is managing the MPC, like 3% is configurable, while the rest is in the cold vault, and the system can make automatic reconciliation, automatic rebalancing. It means that when you use the MPC for high frequency transaction and you reach a specific threshold that the bank decide that according to his risk-based approach, it's too much, there is automatic rebalancing back to the cold vault, obviously without compromising the security.
Yeah, and exactly. And these levels obviously should be set by the institution themselves. Everyone has different risk appetites, of course. So in our case, these thresholds are completely configurable. And I think that's also what you said, Lior, enabling different types of businesses with different types of risk profiles, but taking into account that you need to layer your processes and your security as well.
I thank you guys for answering some of the questions that came in through the chat already about the flexibility of being able to access your assets when you're trading, especially if you're day trading. It's quite difficult if it's just sitting out there and you can't access it very quickly. Henrik, any final thoughts from you about how you guys approach security? I would imagine it's fairly similar, but any final thoughts before we move on to regulation and compliance?
Yeah, I mean, most of the topics have been touched by my co-speakers, but I mean, what's very true is that you have different, let's say, requirements and needs of the users in the market, right? I mean, when we look back, how actually custody started, we went from a very hot wallet market, into a complete cold wallet market. We had companies like Xapo, which were very successful for a while, and then they got acquired by I think it was BitGo, and they basically did cold storage in Swiss vaults in the Alps, right? So it had a lot of physical security aspects. But then again, the question came, okay, but now if I want to have liquidity, what do I do? So I think what we learned here as well is this mix of hot and cold combinations. Sometimes people like to call it warm, something in the middle that combines the two is the key. And then not for everyone, liquidity is important. For a lot of people, they literally just as physical gold, they like to put it into a vault and don't touch it for 10 years, because the typical hodlers in the market. And for others, they want to rebalance rather quickly. And then I think the service portfolio, what we will see in the market as well, I think we will see specialists for each of the different customer types, but then we will also see within the providers, we will see the different layers that you have different, let's say, wallet layers with different accessibility layers. Multi-signature, we've seen that a lot also in this talk already, which plays a role how to access the assets and especially how do you also identify that the user who wants to access the asset is actually intending to access the asset. I mean, that's one of the biggest problems that the market is solving as well. It's like that we are actually sure that this is really the intention, because it's only as valuable, even if you have the perfect cold wallet solution, if that user authentication somehow broke on the way there, then that doesn't help either, right? Because we only want to execute transactions that the user is actually willing to do and intending to do. And I think we could spend probably another hour on this, but I think from the questions that I see, we have a lot more to talk about.
Yeah, we could spend another hour on this. I want to address the audience related to quantum computing. It comes up a lot. We actually collaborated with a group looking at cybersecurity, and there are a couple of reports on the GUC Council's website. So please take a look at the papers on quantum resistant or quantum safe blockchains and what cybersecurity firms are doing around quantum computing and encryption. So we won't cover that here, but I just wanted to say there are resources and reports on the topic. I'm sure you guys have also given thought to that as well. But we are going to move on to regulation and custody, because that is a lot of the questions that are coming up today. Francisco, let's start with you and talk about your custody solution. It is based in Switzerland. Could you give us a little bit of the backstory on why you chose that jurisdiction? And obviously you're a highly regulated entity. So what were some of the considerations you had to really think about as a bank offering this kind of service?
So in first place, as we are highly regulated institutions, we had to find a place where regulation was at least covering the crypto space and the crypto custody. So we started looking in the countries that we had presence in our footprint, looking at which one would be the best place to start offering crypto to our customers, because we wanted to be there. We wanted to start this business and to give access to these new markets to our customers, not only looking at cryptocurrency, but looking forward into the tokenization of bonds, securities, and other assets. And that's where we think the future might be and where we want to be. So we looked at the different places, and we realized that in Switzerland, the different cantonal governments were pushing forward blockchain policies, or at least they were crypto friendly, as they said in the date. And it's also interesting that in Switzerland, you know, they have this decentralized political system with all the cantons. So it was also the perfect place to start exploring and working with blockchain. We went to Switzerland, we visited SAG, the Crypto Valley, and we realized that it was not only a crypto ecosystem, it was a more general ecosystem where different types of companies, institutions, public and private institutions were getting involved in the crypto space, in the blockchain space. And we saw that there was already not only the IT capabilities around custody and trading, but also all the accessory services that you need for building this type of services. We saw that we had legal firms that had already built banking standard crypto services now in Switzerland. We saw that the consultancy firms there really had executed projects, and they not only had the theory or the theoretical knowledge, but also the expertise and by having touched crypto in the past. So we decided that it was the perfect place to start. We also had a good bank with enough resources to achieve this type of project. And also it was the target customers that we were looking for. We saw that there was lots of interest from the private banking and family offices space around in crypto. A small percentage of the portfolio in crypto, they were interested in started exploring these high yield markets. So in the end, regulatory wise, customer segment wise, and capabilities needed to start there, we had everything, and this is why we decided to start in Switzerland. And regarding the special considerations that we had to make, apart from the IT and all the complexity that we have been speaking about, cybersecurity, etc., and building the infrastructure and the service, very relevant, if not the most important part, was building the control framework. So I started building all the processes around this service, all the first line of defense, the second line of defense, the third line of defense, audit, getting them in line, organizing how all this was going to be controlled, as it was a new service for all the bank, not only for BBVA Switzerland. So we had to make a huge effort of awareness and training, not only for the BBVA Switzerland employees, but also for the holding employees, so that everyone in the different lines of defense were comfortable with the service that we were building and were willing to move forward. And in this effort, we also had to go through different approval processes in the bank. You can imagine there were not few of them. There were a lot different approval processes that we have to go through. And in all these processes, we have to do the same awareness and training effort, so that everyone could approve and could know what we were proposing. So it has been a very interesting journey, and I think that we have been able to build a very robust and complete solution for our customers in Switzerland, fulfilling all the regulation that in Switzerland is more advanced than in other geographies, and also the supervisors and the public institutions involved in the financial system, they know a lot about crypto. They understand it very well. So it was quite easy to work there and to build the service there.
Absolutely. I think your point about the challenges of in a large institution doing something so significant and new like that, on top of also finding the right ecosystem to be able to build, is a very important point. And I want to really pose the question now to the rest of the group around you have regulation, and you are you do need to uphold certain compliance and regulatory regime. Micah, however you want to say it, it is coming down the pipe for Europe. Henrik, you are regulated in Germany. Can you talk a little bit initially about your current state, and then how you see the increased regulation potentially coming down the pipe?
Yeah, absolutely. I might have to oppose Fran a little bit. that Switzerland is the most advanced. I think that Germany actually last year in 2020 very much progressively introduced crypto assets as financial instruments in the German Banking Act. So very much in the...
If I may, Henry, just to apologize, I was thinking 2 or 3 years ago when we started thinking about starting the project. Now I understand that Germany is moving forward faster in Europe than anyone else, and I agree totally.
Good point.
I love this healthy bit of banter competition. It's good. It's a good thing to hear. So
hey, we're supposed to be controversial, you know?
Please tell us about Germany. Yes.
Yeah. So actually, in fact, Finoa started in Switzerland because we had the same opinion back in the day, and then we moved it to Germany because we saw the regulation just moves a bit faster. And what they did, they introduced crypto assets as financial instruments in the German Banking Act, which is the very traditional regulation for financial institutions, for any bank in Germany. Same requirements applied for crypto players, which is any crypto custody player, any crypto exchange. They have to follow the rules of the German Banking Act, plus the additional rules that were introduced because of the differences that crypto assets bring to the market. And they keep on reiterating, of course, because I mean, this is also new for a regulator to suddenly have a completely new technology stack, a completely kind of asset within their regulatory regime. But now they keep on innovating as we go. When they introduced it in 2020, it was obviously, for a lot of players, it was quite a shock because it came very quickly. Within a few quarters, they just introduced this and put it in place. And then you had to follow up with your compliance organization. You had to follow up with your IT organization to make sure that you comply with the local regulation. But what it did as well is that it tremendously helped in the German, and I think also in the European context. And I'm getting to Mika in a second. That traditional players who before very often used, also to us, very often used the argument, yeah, it's an unregulated market, I don't want to touch it. Even if I had the perfect partner to work with, as long as it's unregulated, I don't want it. That argument disappeared from one day to another, at least for the German environment, because it is regulated. The players that are here are regulated, they have to follow the standards, and if they don't, they will disappear, right? And that in the institutional conversation helped us tremendously moving forward. What we now see with Mika, to my point of view, it's a bit too narrow in a sense that it focuses very much on stable coins and CBDC in a sense, and not so much on the broader crypto asset ecosystem, so be it utility token, be it payment token, cryptocurrencies. But what it does, it takes, at least from how we look at it, it takes a lot of the rather strict regulation that we have seen here in Germany. It pulls it on a European level and adds obviously the complexity of the European landscape as well. And we very much support that because, I mean, obviously being regulated in Germany is great, but we would love to operate with the same license across all European borders. And right now we can only do that through reverse solicitation. So when the customers come to us and they say, hey, you guys in Berlin, I want to use your service, then great, we can do that. So it's a freedom of contract, but to really approach other markets, there's different regimes everywhere. In some countries, you have to only register, for example, in France. In other countries, you have to apply for the license, as in Germany, and that just brings complexity that doesn't help us as a provider, but also doesn't really help the customer when they have several offices or several funds across the European countries. And I think that harmonization is very important to follow through.
Absolutely. Barrett, do you have any thoughts on, from your perspective, you are obviously looking at regulatory and compliance issues as well as a business. How do you see Mika, in your work in Europe and your business in Europe?
Well, actually, I would even still like to take a little bit of a step back, and so of course we try to tackle compliance issues basically on a daily basis. We have customers operating in a variety of jurisdictions across Europe, and a matter of fact is that today there's still quite some differences between these different jurisdictions, both in maturity of regulation as well as in interpretation of regulation. I think the Netherlands is an interesting example there. Would encourage people to have a look at how in the Netherlands the registration is taking place for crypto service providers. There was a very interesting lawsuit happening actually last week. There was a ruling also from the court in favor of the crypto exchange versus the Dutch central bank. But it's too much detail to go into right now. But what we see is that on the one hand we have to provide that flexibility, because not only are the differences between countries, but it's also still very much in flux. New regulation is still coming up. MiCA is an example of that. And what we try to do is again approach this on different levels, right? So at least for me, compliance is first of all about knowing what's happening, and what we try to do there is mostly integrate with third-party services. For example, on chain analytics or KYC, having information on counterparties for transactions, where a lot of times you have to rely on parties who specialize in that for the ecosystem. And then I think the second thing that's important for our customers when it comes to compliance is having the ability to take action, and that not being, let's say, voluntarily, but enforced action being taken. And this is something that, goes back to what Francisco mentioned about a risk model and processes. But if you then even take those processes and put them into what we call cryptographically secured policies that enforce these processes to be followed, and then even log these processes, because I think that's the third layer, is being able to audit what's going on with crypto transactions. And we work closely together both with our customers as well as with auditors and regulators. I think in 2018 we went through a really extensive process and audit with a customer in Switzerland, where the solution and the setup was also accepted by financial market authorities there. And since then we've gone through many audits in different countries to ensure that our customers are operating their services according to the law. And one of the main aspects there, of course, is also the auditability, and transparency there is not enough. You could say, oh, I can just go into a block explorer, check the transactions, but there's actually a lot of other metadata that is relevant for auditors to verify that everything happened in compliance. And then the last piece of that is actually not just giving access or creating a report for your auditor, but being able to prove that what's in that report is actually correct. And again, this is where we extended our solution, not just with those policies, but with an immutable audit ledger that you could even give a regulator access to. And I think making that more and more sophisticated and involving auditors and regulators in those processes so that they get more familiar with what can and cannot be done when it comes to crypto and how to interpret that data will help, I think, the understanding on both sides, the service providers and the regulators, and create, let's say, a future in which regulation can help the crypto industry and not hold it back. I think that's absolutely not necessary.
Barrett, you make an excellent point. And for any of you who are not familiar, New York State Department of Financial Services, for the first time, put together a tech sprint a couple weeks ago, and they invited the crypto community to specifically solve for crypto reporting using blockchain and or any other innovative ideas to solve for better reporting. And so this is again engaging the crypto community to find to solve problems that the regulatory environment has, and perhaps in Europe they could do similar. I'm going to leave you on the regulation compliance side with a wish list or a wish. I think Henrik would like harmonization, or you can add something else if you would like, Henrik. But if each of you could ask the regulators to do X, what would that be? Is it clarity? Is it harmonization? Is it more innovation hubs, sandboxes? Please, if you have a view. What would help your business grow?
In our case, as European player, harmonization in Europe will be a very good thing. We will also bet for being a regulated custody player. And when MiCA comes, we will be there. We want to be there. We want to have our organization and processes comply. And we will start by trying to get the German licensed to, so that when it comes to MiCA, that we get it rapidly, right?
Mhm.
So this is our plans.
Yeah.
I would. Yeah, sorry. Go ahead.
Go ahead, Lior, please.
Go ahead, Leo.
So on the other side, as partners with the institution that need to be comply with these requirements, eventually, I think that if the regulators would be opened for being education, but such providers that existing in the market for a long time, they will be able to move faster and more sophisticated decisions. We find ourselves in the past years in a lot of conversations with different countries, either in Asia, in Europe, or in the US, in order to educate them mainly on the security side and the usability on top of that. So I think that if each of the countries would be more open for these ongoing discussions, and maybe even put a timeline to collect all of this data from the players in the market, and then make a decision that for sure would be something that would accelerate the market. I would say that on our side, by the way, in addition to providing the technology stack, we understand that there are multiple of partnerships that should be in place, so the institutions will be able to comply with these requirements. So, for example, the insurance is something that's very important for these institutions that we are working with or in discussions with. We spend a lot of time and effort with our partners in London, from Aon, in order to create the highest insurance in the market of $500 million per bank that's using our solution to manage its digital assets by himself. We combine it with a unique attestation crypto service that we have with Ernst & Young, along with partnership with Chainalysis for anti-money laundering. So this combination, along with the technology by itself that comply with the requirements of either the OCC or FINMA in Switzerland or BaFin in Germany, can make the full picture work, and this is where our intention is.
Excellent. You actually said the magic word, which I wanted to move to next, which was insurance. People don't talk about it enough. It's actually a requirement for many institutions. It's a problem in the market. Full disclosure, I work with a startup looking at crypto insurance right now, and the market is niche at best because it's specialized knowledge. It's slow, the incumbents, in terms of their innovation pace, and there is growing demand on the crypto side. So I would love to pose to you all, insurance for crypto. How much of a problem is it? Do you think it is being solved? And would love to get your views around crypto insurance or insurance on digital assets in crypto. Raimundo or Francisco?
Yes, we were able also to offer, to agree with an insurance company, first level insurance company, to offer insurance to cover up to 1% of the assets held with us for our customers. But it was a difficult task. And I think it has to evolve in all terms. And I think it will evolve accordingly to the regulation, because as regulation also touch responsibilities, insurance options have to be there, and it will be evolve accordingly with that.
Yeah, I think you mentioned a lot of points. I think difficult is a nice description. I mean, it's a very niche market in a sense. I mean, you already heard today how many different kind of approaches to crypto custody are available. And then you think about traditional insurance companies. I mean, in theory, you can insure everything, but it comes at a price, of course, right? And if you just, insurance companies work with statistics, and there is no real statistic in a completely new market, especially if it's innovating so fast. Then which statistic do you take based on the premium and the pricing that you want to then bring to the user? So it's, I mean, it's very difficult, and even the largest players in the market, like Coinbase, etc., for custody, they have just small parts of the assets under custody completely insured, because it's just if If they did 100%, then the pricing would quadruple in that they would have to charge to the customer. And then the customer, again, doesn't really want to pay as much for the service. So I think it's a mix of what does the customer want. Again, it's the same with the security standards. What does the customer really want? How important is yield versus pricing? And then the regulators, I fully agree with that with Raimundo. I think this is also a part where they have to probably set the boundaries a bit. Because I mean, in the traditional financial system that we have in Germany, we have pretty clear investor protection, at least in the B2C space. You know, like if you invest 10,000 euro, or if you have 10,000 euro with your bank in Germany and the bank goes bankrupt whatsoever, up to 100K, it's protected, you know, by an association between the banks and supported by the regulator. And that doesn't exist for crypto assets, for example, in Germany yet. In the B2B space, it's anyhow a different question, but even for B2C it doesn't exist. And I think there is a lot still to be defined, which includes the providers as us, the insurance companies on the one hand side, but then the regulators as well. And at the end, the customer also will have to tell us what he wants to like pay in a premium for a 100% insured solution, for example.
Yeah, just to add on top of this, so I agree it has to mature the market of the insurance in this space. What we see in the current offering is that sometimes you have to be very careful with the terms and conditions of the insurance because it may only cover one part of the custody process or one part of, but not everything. So you might have the false confidence that you are secured or insured, but it's not real because you are only insuring a part of the whole process. So yeah, it needs to mature. And going back very quickly to regulation, I would say that not only harmonization at the European level, but also at global level. So it's important that we have the same regulation regarding compliance, AML, custody, market abuse, etc., in the different geographies. Otherwise, we can see a regulatory arbitrage and companies operating from these jurisdictions and not from the others. And also it's important to address the gray areas. So MiCA is not going to cover everything. It will address some things, but not everything. And we will still have some gray areas where you don't know if you can do it or not. And you know, for regulated institutions, it's very difficult to operate in these gray spaces. Maybe for a fintech, they are more willing to do it, but for us, it's complicated. So it's important that the regulators, and they are doing it. I mean, in Europe, there are several questions to the general public, to different institutions, about if there is a need to change the securities laws, if there is a need to adapt the payments laws in order to you know, to fulfill the whole picture of the crypto, of the new world that is being created around crypto. No?
Absolutely. Lior, final words?
Yeah, yes, please. I very much agree with Enrique and Francisco. I think the best approach to take is the combination that the service provider will be open-minded in order to make insurance on specific amounts, so it will be reasonable as a price for the end client. And on the other end, providers like GK8 should make the hard work with the insurance in order to prove the risk assessment and what's different about it in order to make the insurance feel comfortable to offer the services of insurance for such technology. It's very important, as Francisco mentioned, to understand that the terms are very important. In our case, we worked very hard in order to position it that it's covering unauthorized transfer from the cold vault. There are some insurances that not really covering what you need, but if you have the right terminology and you're focusing on proving that you have the right technology to solve the security issues, it's something that should work out, and the combination of the two should be something sufficient for the end client.
Great. Thank you very much, guys. We could talk about insurance as a whole nother segment, but we've got 7 minutes left and we need to cover beyond crypto, digital assets in general, and custody and DeFi. I'm going to start with Barrett. Barrett, when you think about securing digital assets beyond the cryptocurrencies or crypto assets, is it any different to you?
In its core, no, right? So if we tokenize any other asset, it is a token that lives on a blockchain protocol. It behaves exactly like any of the other coins. You need a wallet. You have your private keys in order to sign for transactions. So managing all of that is I think absolutely the same. I think processes, let's say there's some additional processes that become relevant, especially around the creation of those assets. With Riddle & Code, for example, we are also heavily involved in industrial tokenization, even, automatically tokenizing, output of energy from solar panels. So, having some kind of control at the source is highly important to prevent, random tokens being created that have no underlying value there. So the process becomes a little bit more complex, a little bit longer, but ultimately these are assets that represent a certain value that ideally would also get access to, the markets and the infrastructure that crypto has, so that they can be traded, so that they can be held. So I think for the pure custody, a lot of it is the same. And it would be really good if we could see those worlds merging. Of course, we see that happening in the financial industry already, where financial assets are being tokenized. But again, that's largely a different infrastructure. That's different marketplaces from crypto, and for industrial tokenization, that's even a little bit further away. So I think I didn't express a wish around the regulatory topic, but my wish for this area would be that these worlds start to merge, and that we can build bridges so that any asset can be tokenized and digitized and can benefit from the same markets and infrastructure and innovative products and processes around it.
Great, thank you. Convergence, absolutely. And the question from the audience did allude to NFT specifically. I put that in the digital asset category. So Henrik, any views on, do you treat NFTs or other digital assets differently in terms of custody?
Yeah, we do not provide NFT custody services just yet. I mean, obviously, it's a tremendously interesting market as it's exploding at the moment. It's still rather B2C driven if you look at the participants and also the use cases, like NBA Top Shot, for example, which is going through the roof with Dapper Labs. Although, I mean, Finoa is providing, as the only institutional custodian globally, custody for the Flow blockchain, for example. So there we work closely with Dapper Labs. The NFT use cases are built on top of Flow. So logically, I'm pretty sure that at one point we will provide a product for this ecosystem. But still to be seen if this is something where B2B and institutional players will also move into. I mean, if it just develops like the traditional, I call it already traditional, like Bitcoin, and maybe the first DeFi use cases, you had first seen the retail space attacking it, and now you see the institutional space following through. Probably with NFT, it's going to be something similar, and hence totally interesting. Just for now, not our target market yet.
Thank you for that. Lior, Raimundo, Francisco, do you have any views on securing digital assets?
I would say, as a customer of the fellow panelists, I would say that I would need a custody provider that is fast in implementing this new type of assets and being able to add NFTs, securities, bonds, or whatever it comes into their solution. And even looking one step further, if they are able to connect their custody solution and enable us access to maybe DeFi protocols, and that would be great in the future if we are able and regulation allows it, obviously.
So Francisco, I think we should talk. In our case, on the solution provider kind of thing, our innovation is on the cryptographic layer, more specifically on the signature algorithm. In our case, this is something that can be used for different kind of assets. INX is an example of one of our clients that has security tokens, and NFT is just as another example of just other token that represented, or depends on the project itself, but probably on one of the popular assets. So as long as you have the support for tokens in large or smart contracts in large, even more specifically on ERC20, this is something that can be used either for NFT or even for DeFi.
Great.
Yep.
Well, look, guys, I can't believe this, but we've blown through an hour and 15 minutes, and you've got Daniel here telling us we need to wrap it up. So I want to thank each of you. It's been incredible to talk with practitioners, builders, pioneers, leaders in this space. We have a lot of work to do, and frankly, we didn't get to all the questions in the Q&A. Apologies for that, but thank you for joining us, and thank you to the panelists for your time and expertise. It was really great. Over to you, Daniel.